All right, welcome everybody, and sorry, super on.
That was a good intro, though.
Yeah.
Yes.
All right, welcome everybody to Pitch Breakfast. We're back here at ECOS for our second RevTech Labs Pitch Breakfast. We're very excited to have everybody here join in person and on Zoom. So if you have not been to one of these before, Pitch Breakfast is an event where entrepreneurs pitch and panelists enrich. We're supported by a bunch of amazing organizations that we're going to get to introduce here in just a second. But first, we want to welcome everybody who is here for the very first time. So quick announcement to people who are, sorry, my clicker's not working. 1 second. There we go. All right, so everybody who is online, if you would please keep your microphone and your camera off. And then if you've got any questions, just go ahead and send it in chat. And that way, if we've got time, we'll be able to get to those questions. And if you are joining us online, we're going to have networking with the founders that pitched today immediately after the presentation. So stick around and we'll tell you how to get to the networking room to network with those companies. So today is this event is part of Global Entrepreneurship Week. So there are events happening around the world all week long, 180 countries, 40,000 events, including 20 different events happening here in Charlotte, all in support of innovation, entrepreneurship, and small business. So if you, at the end of the event, I'm going to tell you a little bit more about other events going on this week for Global Entrepreneurship Week in Charlotte. And we got a message here from Matthew, your very first Pitch and Breakfast event. Welcome, Matthew, and welcome to everybody else who's here for the first time. So we are here at ECOS headquarters. So ECOS is a company that makes some amazing software for breweries and wineries, and they have allowed us to use this space for last month and this month's event as part of the RevTech Labs Accelerator. So we want to give a big thank you to ECOS for hosting us here today. We also have some viewing parties happening right now at Flywheel in Winston-Salem, Flywheel in Concord, and TechWorks in Gaston County. So I want to give a big shout out to everybody who's watching on the viewing parties at all of those locations. All right, so we've got, like I said, some amazing companies that help make Pitch Breakfast possible. And these include Spengler, Agins, Bradley. They're attorneys for Charlotte's startup community and have been working with us since the very beginning of Pitch Breakfast 9 years ago. They work with entrepreneurs and local businesses on everything from formation to early stage funding. And really, they're just knowledgeable people who know a lot about business law. So give them a shout if you've got any legal questions about your business. Then we have NK Patent Law, which focuses exclusively on IP, patents, trademarks, copyrights, anything intellectual property. And that is the one area that Spengler and Agins Bradley does not do, that NK Patent Law only does. So if you've got any questions about IP, Ani Agarwal with NK Patent Law is the guy that you need to talk to. We also have Dual Blue Partners, amazing partners who work with management teams to build digital platforms. They are the tech partner for a number of amazing startups in the Charlotte area. And in addition to really building great software, they're also amazing connectors. So if you have not met someone from the Dual Blue team, there's somebody you definitely want to have in your Rolodex or in your LinkedIn if you don't already. Aging myself there. And then Powderly Butchnick. Powderly Butchnick is CPAs. They are our CPAs at Pitch Breakfast and CPAs for a number of startups here in town. They're right uptown and can help you with anything having to do with accounting, tax, advisory services, etc. Awesome people to work with. So we want to give all of our sponsors a big round of applause as a thank you for supporting this event. Sorry, I forgot, we got a couple more. Insperity, sorry about that. Insperity, they offer a package of HR solutions for all sorts of businesses, whether you are just starting out, right, a couple employees, all the way to as you scale. They use technology to help make the whole HR side of your business a lot better, a lot more efficient, and able to scale. And then we also have Catapult. They standardize and automate RFPs, the whole RFP workflow across any industry. And they are hiring right now. Really cool company to work for. You can learn more about them at catapulthq.com. Now let's give them all a round of applause. So thank you. All right, so we've got a disclaimer, and that is that this event is educational in nature. The companies that are pitching are practicing and not conducting a securities offering. None of the companies pitching intend for this to be a general solicitation. The translation there is when they say, I need $500,000, they're not actually pitching you, they're simply practicing their pitch to an investor. If you are interested in investing, feel free to connect with them directly and have that conversation afterwards. So with that, the event's gonna take this format. We have 3 companies. Each one is gonna have 6 minutes to present their business model, and they're gonna do this with slides. Then our panel is gonna have 10 minutes to provide feedback, ask questions, and overall, get some thoughts and feedback for the companies. If we have time, we'll take audience questions, either here in person or any that come up in the chat room. Otherwise, you'll have a chance to ask those questions in the networking portion after the event. All right, and then here behind me, we've got our panelists, Dr. Shantae Williams, who is an activist, investor, speaker, author, all things startups. She's been great with us. I think we're going on a couple years now as a panelist. And so we really want to give a big thank you and a welcome to Dr. Shantae Williams. And then we have Steve Amidio, founder of Clairvoyant Ventures. Steve has been with us, I think since the very beginning. 400 years. 400 years. And so we want to give a big thank you to Steve for being here as well. Thanks. All right, and with that, we're going to welcome the companies. We have 3 companies from the RevTech Labs Accelerator. RevTech Labs has their Venture 135 event conference next week. So if you have not checked that out, go to venture135.com. But today we're going to feature 3 companies from the latest cohort 15 of the RevTech Labs Accelerator. And they are Freeman Capital, Solid Block, and Cambio. So with that, we're going to let Freeman Capital take over and switch the slides, and then we're going to get started with the pitches. So thanks, everybody.
Good morning, all. I'm confirming that you can see me and see my deck.
Yeah, looks good. We could use a little more volume before we start real quick. I don't know if that's on our side. That could be on our side. Hang on a second.
I can also scream.
That's all right. Now we're good.
All right, perfect. Yeah, so thank you all for your time today. My name is Calvin Williams. This is Freeman Capital, where we make building wealth easy, and that's a huge statement because it's very hard. However, it's working. The average user within our platform increases their net worth by 40% within the first year. And speaking of numbers, we are at the pre-seed stage. We should be doing over 115 grand in ARR this year due to our 7,000 free and paying users within our community and platform. The problem that we're looking to do and solve is how to unlock the lack of access, the lack of education, and the lack of tools to make the wealth building process easier. When you look at our typical customer, it's someone like a Imani who is living in a metropolitan, working a good job, but she's not maximizing the financial tools that she has. When she is looking for things financially, she's a first generation wealth builder, can't go to her parents for help, and she finds a bunch of apps that are very transactional. When she wants advice on how to increase her net worth, she ends up in the forums of Reddit, which is not where you want to be. And that's why our solution to this problem is that we are building a robo financial planning platform that is providing wealth journeys that have been designed by certified financial planners that have been proven to increase our customers' net worth. We conducted one of the largest Black private millennial wealth studies, and we surveyed over 4,000 people. And there we learned a lot of things. One, speed to relationship. When folks sign up, they can talk to us as prospects or as customers. They do what feels normal. Set up their profile, connect their accounts, all that is normal. But on the back end is where things get very unique. We tie users to micro personas, and each micro persona has a defined wealth journey. We then can see the items that they're missing, the items in blue, and then look at those actions that they need to do. We then can produce recommendations that month and every month after that would increase their net worth. And doing this, we also couple it with human financial planners that they can schedule Monday through Friday. And because we focus on gaps and closing them, Imani, as a woman, we want to make sure she's not falling victim to the gender pay gap. So early on in her wealth journey, we will check her salary, see if she is, and then make recommendations on how to talk to her manager or financially prepare to get a new job. We are the first firm in this way providing comprehensive financial planning one-on-one at scale. And that's how we've been helping our customers grow and build their wealth. You know, the big difference for us is where these recommendations are coming from. Most firms who do financial planning are prompting users to get on the phone and talk to humans to get recommendations. With our personas and wealth journeys, our platform can provide the recommendations, and then our humans are there for providing fringe support on cases that questions that have come up and handling fringe cases that we haven't coded yet. And that is really important because that's how we handle and solve the financial planning scaling problem. Most of our competition has a ratio of 75 clients to one planner. We are at 400 clients to one planner right now, and we're on path to get to 1,001 by the end of this year due to increasing our automation for onboarding and within our wealth journeys. When you look at our market, it's of course massive when it comes to all of financial services, but narrowing in on providing financial planning to an underserved demographic, our first being the Black consumer, there's over 22 billion in potential revenue there. And we are the first SEC registered automated financial planning firm who's targeted and focused on this demographic. The way that we generate revenue is three ways. One, off of subscriptions, where the average subscription is $50 per month, then off of asset management fees, and then thirdly, commissions on products that we sell or refer in our marketplace. Lead gen, like how we do for insurance and soon mortgages and more. This layering of revenue is why our three-year lifetime value is over $2,300. But the really powerful thing is due to our 98% paid user retention rate, we're able to recover our B2C CAC within 4 to 5 months. Now, we really only launched B2C to validate our product, market, and customer. We scale up and grow through B2B partnerships. That's where we have partnerships signed and launching with banks, financial institutions who will either white label our service or provide distribution for us, and we share a quarter of the ongoing revenue with that partner. That's how we have over 400,000 people that we'll be tapping into starting in about 3 weeks, going into January, and we have over 104 partners lined up to work with us next year. And capitalizing on that B2B play is how we get to 1.1 million in revenue by the end of next year, and then over 27 million by 3 years, and then over 100 million within 5 years. All of what you've heard is how we've gotten to the growth that I showed you in the beginning. But if you can only remember 2 key numbers, here they are. The fact that we've had 98% paid user retention rate for 12 months with a net promoter score of 70. So they're signing up, loving it, promoting it, and building their wealth. Myself, I was recruited at 17 by the Department of Defense to build top secret computer programs. Went on to be one of the youngest directors at Lincoln Financial. And the rest of my team has over 70 years of combined experience in client-facing wealth management, technology, and marketing. We are in the middle of a 1.5 million raise, which I can talk about in Q&A. But in all, we are working to close the wealth gap by taking what we've done for many, do it for millions, because we are Freeman Capital and wealth starts here. Thank you.
Panelists, if you want to go ahead and introduce my turn.
Yeah.
Oh, you're so gracious. Hi, Calvin. Good to see you again. It's been great to see your journey over the last, like 4 years now. Yeah. A couple of questions. So if I read the last slide correctly, you have 360 paid users, or are you just up 360 paid users?
So yeah, so we have just under 400 since we launched this product in March of last year. And we did that for a private beta where folks could not sign up on their own. And now we are changing that and folks can now sign up on their own starting this month.
Awesome. Any indication of that 7,000 total users, those free users, how many you'll be able to convert over to paid, and how are you going to do that?
So it's actually not our focus to do that. The reason why we built up this free base was because we provide all of the marketing collateral to our B2B partners. We basically tested the messaging and marketing to find out what what personas respond to what messaging. And now we hand that over to our banking partners and our financial institution partners who take that same content and roll it out to their audience, which is what one of our partners is doing, where they are sharing it with their 5,000 leads per month that they are sending our way.
Oh, I'm sorry, one more question. Okay, so if that's your strategy, if you're a person like me, I dislike institutions and their financial planners, so how do you plan on getting more folks to be open to those services from their institutions?
Great question. So one, you're probably doing a bit better than most of our clients, so you're not exactly our target market. But the folks that we're targeting in terms of the B2B play are also influencers. So you have a financial educator who has a online community of 100,000 people. They sell a course. At the end of that course, they then partner with Freeman to send clients that have completed their Instagram course to us, and then we then extend the lifetime value of that influencer's audience. So we're working up and down that scale with influencers, institution, and banks, and then that's what we are targeting specifically.
Awesome. Hey, Calvin. Good pitch. I got some basic questions, and then one to build off of what Shantae was talking about. So I was trying to follow along, but I haven't had enough coffee yet. So your CAC calculation is based on the little less than 300 or 400 only then users. I was trying to follow that math, and I was curious what the actual CAC is at the individual unit economic level, like one customer, what's the conversion cost?
Yeah, so the way that we built that CAC is based off of the conversion of one customer. And so what we did was that we took the initial 7,000 folks, we looked at the conversion rate and then the cost to get them, and then we came to that CAC, which is $250 per user.
Okay, so 250 is what that CAC number is.
Correct.
Okay. All right, that's good. That's helpful. I think just in the spirit of kind of looking at the pitch, I think that number is, and even maybe additional analytics on that number, because you guys are obviously converting people. So I'm good. I'm sure the math is good and it's a good number. When you talk about the use of proceeds associated with raise, for you guys, you got a baked product, it's working, things are going well. I'm going to presume that a big chunk of the $1.5 million is probably going to customer acquisition. Maybe some of it's going to platform technology and build out as well too. That makes sense. But for me, I always like to see, and I know you got very limited time here, but maybe slide in one slide, even in a quick pitch, about how you're going to use those proceeds, $1.5 million, because my tendency is to think generally that it's easy for founders to underestimate cost of customer acquisition. And if a big chunk of that $1.5 million is going to customer, I'd just like to see a little bit more detail on the breakdown. But I know you got the math, and so it's right.
Yeah, so we actually had that on the slide where we talked about the raise of 1.5 million. But to go into a little bit more detail, we have seen that our acquisition costs are lower than the industry average. You look at LinkedIn, the average cost to get a lead is $52 per lead. We currently are around $21 to $22 per lead due to the targeting and the demographic and the branding that we're doing. So it was there on the 1.5 million slide, but I'm happy to expand on that in a future pitch or of course in Q&A.
Yeah, no, that's good. I just think from an investor standpoint, some of that data is really useful.
That's great to hear. Definitely.
The other thing I would say too is, my guess is that there's some pretty secret sauce around the personas in the wealth journey, just kind of whether that's, the way those paths are drawn out and part of the market research that you've done. Hey, what's up, buddy? I think it would be cool to see, as much as you can, a little bit more on that. It's probably also in a longer pitch, but, just the simple kind of thinking around that is that you guys are engaged with customers at a level that are going to allow you to define and understand those paths in a very, very unique way, and kind of talking to the investor about how that was developed, what that methodology is. Maybe there's even some proper kind of scientific and survey thinking around that. I think that's pretty secret sauce in this model in particular, and so I'd like to hear a little bit more about that and maybe a longer pitch as well too.
That's a great point of feedback. Thank you.
You can get you gonna do audience or yeah. So a couple questions came in on the chat. One of them is, Cool idea. How are you helping to fix the idea that people still make bad spending decisions in the moment that are counter to goals, recommendations, and plans?
I'm not sure you can hear you.
Sorry. How are you helping to fix the idea that people still make bad spending decisions in the moment that are counter to their goals or recommendations?
Great point. So in conjunction with the Duke Common Sense Behavior Science Lab, they have helped us to put more behavioral science into the actual application. So what we're doing is that we are building a platform where we can identify spending patterns. And of course, we can't do it at the point of sale, but we can do it soon after, and then do a new type of therapy called financial therapy, where we can prompt the questions around why did you make this spend, what's going on in your life, how to help you work through your spending in this, this category. So there's a lot of research that we have done in the past 6 to 8 months with our Duke Common Sense Research Lab to help add in the behavior modification to help people stay on a path to build wealth. It's a longer answer, but I can speak to it probably after this session.
Hey,
Definitely should highlight that.
Yeah, I was going to say, Calvin, I think it's really important. Wearing my marketing hat. Obviously, you know the space way better than any of us, but you're talking about behavioral science stuff. You're talking about paths and journeys and personas. This kind of knowledge and understanding engagement at the customer level is absolutely fantastic. I hate the term robo-investing or robo-planning. I hate those markets all front and all of them. I just don't, and to me, if you're down to the behavioral science level of what your customers need to do and are holding your hand through the planning process, I would personally run away from that term. I think that term is very transactional. It's very low value. You guys are obviously doing something much deeper and more engaging with customers. So I know it's a market term and you got industry and probably search terms and all sorts of crazy.
Yeah, exactly.
You got to worry about to get that done. But if you're pitching, man, you're anything but robo, in my opinion, which I think is really good, especially for this demographic, because education is a huge part of it. So anyway, that's just my 2 cents.
No, I thank you for that, and I will look at that. It's tough because we're doing something new in financial planning. Folks are always trying to connect this to something old. But we'll try and thread that needle better.
All right, with that, we're going to move on to the next company. Thanks, Calvin.
Thank you.
All right, and with that, we're going to move on to Solid Block. So, Yael, if you want to go ahead and share your screen. There you go.
Hi, everybody. I'm Yael Kumar, CEO at Solid Block. Happy to be here. And we are working on problem of wealth generation through investment in real estate. We are working in the market of $300 trillion value, where only 1% of that value is liquid or otherwise tradable. So our mission is to make real estate work for everyone. There are 3 primary challenges for real estate investors. Number 1, you need a lot of money to start investing. Number 2, you cannot access good deals. And number 3, your money is locked for 5 to 7 years in a deal. So Solid Block enables investors to buy and sell any asset at any time, just like NASDAQ for real estate. We transform property into tradable product, connecting asset owners with investors and traders through our token origination platform, where we mint these digital securities, and we partner with multiple trading platforms, exchanges, and investor networks where investors are located. Our first use case was in fact, the first industry successful tokenization for the St. Regis Aspen Ski Resort. It raised $18 million using our platform. It experienced a high token upside in the first 18 months, where it was listed on an exchange called T0 and is now trading there at around $1.20, but it launched at $1.30 before COVID. And it resulted in a good initial revenue for Solid Block. So our current milestone is we've developed this token origination platform in the last 2 years, And now we are continuing on our roadmap to become the financial services platform. So imagine a bank and all the different services that you would expect by putting your dollars in a bank. And in our investment bank, you put in your real estate dollars or your real estate, and then you can have access to loans, DeFi loans, decentralized finance loans from peer networks. You will be able to use these tokens for payment, create different funds or REITs of your own, derivatives, indices, benchmarks, all kinds of trading tools. And our final milestone is to create the first decentralized investment bank focused around real estate towards the path of exit by acquisition by one of the centralized and big investment banks. Right now, in terms of the competition, we have several large, very successful companies like Securitize, Vertalo, Polymath that service private equity companies. They do not service real estate. It's a different type of product, different animal for them altogether. Solid Block is focused just on property. We have some noteworthy competitors in that space, such as Real Blocks and Red Swan. They're probably the most successful, as well as Invenium. It's more a partner than a competitor. They work on connecting IoT from commercial buildings to commercial projects to be able to provide daily valuation of properties. So, and in our space, Solid Block, we're a marketplace. We're focused on property, and we are focused on connecting these assets to the secondary markets. The only other company that right now in the space is doing that, it's connecting real estate to DeFi is Realty. They work primarily in single family residential, and we work with commercial properties. We have a portfolio spanning mainly commercial assets, so detox facilities, medical facilities in Florida. We have a resort in Panama, and we have a portfolio of a bond based on London property. My co-founder Yuval is in the IT space. He's had many years in a technical background. Myself, I have a more financial background, studying on Wall Street, going through private equity and M&A career, working for Ernst & Young and working on IPOs. And, I arrived to blockchain. Both of us came to blockchain about 4 or 5 years ago through different paths, and joined forces in 2019. We have a fantastic team spanning mainly 3 continents, I guess. Majority of our team is in Israel. Our company is US based. We have 5 employees in North America, and an office in India and an office in Eastern Europe, focused on different parts of the company. Our advisory board has very impressive individuals from all walks of life, from the former CEO of Tel Aviv Stock Exchange, Gal, who's helping us with the secondary market aspect. Being a startup in the fintech space, we have a large number of partnerships to complete pieces of the supply chain, from exchanges to broker dealers to crowdfunding websites. And we're finished our previous round, the seed round of $1,100,000. Now we're raising $1.7 million. We just had the lead investor put in $500,000, Draper Associates, and we need about another $1,100,000, which will close by the end of the year. Thank you very much.
Should I go first? Yeah.
Hi.
Hang on. Microphone. There you go. Cool. Thanks. Good pitch. This is a tough one because I think it's a great space, and you guys are obviously far along. I guess it depends some on who the audience is for this pitch and who the target of the capital raise is. It sounds like you got sophisticated investors, so they're probably interested in a more sophisticated pitch. This space is really hard for the average investor to understand, and so I guess I'm wondering, first of all, before I provide any of the feedback is, are you trying to bring this kind of visibility and deal flow to ordinary investors who have the capital to invest in commercial real estate but aren't associated with a fund or a private equity group that would do it in a traditional sense? Or are you trying to even get to like a more man on the street, excuse me, person on the street, type, investment thesis? Because I think I like this space a lot. I think, blockchain and tokenization is going to bring a lot to real estate, commercial real estate and consumer, but it's still very hard to understand. And so I would like to see maybe in a pitch like this, like, here's the traditional investment path. Steve, who has a little bit extra cash, puts it with his banker puts it in a private equity fund. He has no idea where it goes. He has no idea which commercial entities they deployed in terms of real estate. He has no idea when the return horizon is. He has no liquidity. Like, those are all the problems in that path. And here's what you guys solve, right? I get to know what real estate I'm in. I get to maybe even direct some of that. I get liquidity through the token. Here's how liquidity happens. Here are the exchanges. Like, just a little bit, it's just a really complex space. And you guys obviously are a pretty sophisticated company where you are. So that part is the only kind of feedback on the pitch. I love the business and the idea, and what you guys are doing is going to be a huge space for sure. But sometimes these pitches, especially around blockchain, are just hard for people to understand. That's all.
That's a great feedback, and I appreciate that. Definitely, I'll incorporate a slide on how this is different from the traditional process. That's a good thing.
I mean, in the end, investors want to make money, and so if that's the target, showing them the path to their returns is just kind of a simple way. And then if you've got a really sophisticated investor who's going to put a real amount of money in, then you can go into, here's how we're making the market, and here's how the tokenization works, and here's what we're minting with, and all the blockchain side and the tech side. But anyways, otherwise, it's a good pitch, and I think it's a wonderful space. So.
Yes, I have the same feedback. I'm a lowly average investor, and I got confused. I know the space, I know what you're doing conceptually, and then I really started to swim with all of the other stuff kind of built in. Are you targeting, I'm gonna call them Joe Schmo, who might be interested in real estate investing, all those folks that Calvin's going to create that have all that extra money? Are you targeting those people, or are you targeting people who already know the space really well?
So the Joe Schmo will likely come to an exchange, and the exchanges are targeting everybody, right? So, and then they work with much lower amounts. We work with numbers in thousands of dollars. So we actually would rather target high net worth individuals or ultra high net worth. It's much easier for us in terms of management. And so, we probably would need to, speak to people that understand real estate a little more. They don't have to necessarily understand blockchain or crypto, because the only difference from what we're doing and other, let's say, crowdfunding platforms or other investment platforms is that we are giving an exit pathway and of liquidity to the investors, right? So they could invest through, CrowdStreet or YieldStreet, or if they're sophisticated enough, they can probably go directly to an asset and, to St. Regis, and if they have $500,000 or, go invest in that asset, but then they'd have to sit on it for 5 to 7 years. And we hear this a lot. We hear actually from fund managers or brokers that they brought a bunch of investors to a project, and right now, because the economy or the market is not great for that specific project, the owner doesn't want to sell, so the investors don't have exit, right? So it's been 5 to 7 years, and they still cannot get their, they're getting their dividends, but they want their money, and so we are giving the solution right there. Right. So the path is not that sufficiently different. Just that piece, maybe I should have mentioned, in the St. Regis example, you're normally expected to get 5 to 6% annual return because it's a landmark asset, right? These people who invested because of the high increase of the token, they were able to exit a year and a half later and get the dividends on top of this, and they got 20% annual return, right? Because they didn't have to. The highest increases happen in the first year, usually first few years, because they did some renewals and value add to the hotel, right? So now the value spiked. They didn't have to wait until they refinance. So that's what I should have shown, like basically the increase of the value for people who sell early.
Yeah, I think that's important. I mean, I think you have two things. One, too, you're not targeting a new investor, so I don't think you have to worry about like explaining what's going on in the blockchain world of tokenization, although people do perceive that, even some sophisticated investors, to have undue risk because of everything that's going on in DeFi, so maybe there's some of that. For a more sophisticated investor deploying $500,000 or $1 million at a time, the other thing I'd like to see in a pitch like this is, I think all the people in your space are trying to figure out how to map those investments and the tokenization to like traditional tax and wealth building strategies, and not knowing what's going to happen from a regulatory standpoint and tax with tokenization and some of that kind of stuff. It'd be interesting also as a sophisticated investor to know, can I still participate in some of those tax advantages? If I buy a token that has in its portfolio, for instance, a series of commercial properties that are in opportunity zones, can I get liquidity through the marketplace and still, achieve the tax benefits of opportunity zones, or do I lose that because it's tokenized? Like, I would have more interesting questions around, kind of some of the tax and regulatory stuff too that's coming down the pipe. And so, in a more sophisticated investor pitch, maybe a slide on what you're up against there and what some of the advantages of that might be for you guys.
Yeah.
With that,
thank you so much. That was great.
Yeah.
Have a good day. Bye.
Yeah,
Thank you.
And a quick reminder to all the founders that are presenting, if you look in the chats, there's going to be some comments and questions. If you don't get a chance to get to them in the presentation, just hop in the chat and see if you can respond to some of those. So thank you. All right, we originally had 4 companies for today, and I thought we were going down to 3, but it looks like our 4th founder joined us, so we're going to slide into another presentation. Eugene, if you can go ahead and share your slides. And we've got Tap to Pay.
We have you.
And looks like we can see it, so if you want to unmute your microphone, turn on your camera, and get started whenever you're ready.
Hello everyone, my name is Eugene. I'm CEO and founder of Tap to Pay, a service that activates payments in very new channels, sales channels like social networks, messengers, website for businesses, and accept it like seamlessly for both sides. The market called like social commerce, and it grows about 35% year over year, and gonna reach about 600 billions in 27. So, but for merchant, exists some challenges while selling there. It's very long checkout process for the buyers, very limited payment methods available in a social media messengers, and very hard to manage all of these channels. So we offer a social selling platform the range of digital channels. It could be websites, messengers, social networks like Instagram, Facebook, Twitter, and so on. So let's see how it works in demo. Please meet Mia. She would like to buy some present. She just open a Facebook and try to click on the just a post of Tap to Pay merchant and got immediately invoice in her messenger with full details about the product. She can accept this invoice and make a payment through the previous payment method or add the new one. We can accept absolutely any payment method that's available in the market. It could be cards, electronic money, crypto, everything. And in seconds, we notify merchant and buyers that payments done successfully or not. So it's really quick process. Tap to Pay this, and merchant can create products, track subscriptions, everything without even a piece of code. He can activate accepting payments in all of these channels. We can connect merchant and buyer in the messengers in this really unique opportunity for online sales market. Merchant can support, provide service, and sell in real time and decrease cart abandonment rate in the end for good buyers. So how it works, merchant create account in Tap2Pay. You can enable payment providers that already use, for example, PayPal or other acquirers, bank acquirers, and put products and offers in all of possible channels to sell service. So from the buyer's perspective, it's really seamless payment process. We don't ask to install any application. It works on any device. We support buy in one click flow. We connect messengers, buyer and merchant. It's accept any payment methods, and it's highly secure with PCI DSS certification. So in our 6 months, we just got 900 merchants. We got European payment institution license, so we can offer our service for full Europe. We have even sold license for the bank. In our business model, we have 3 types of offers, like it's freemium, when a merchant pay just a commission fee, depends on the business and location of the business. Banks could buy a license, and we have a premium plan for the more serious businesses. We did just this summer native integration with PayPal, and they cover all our expense on this process. We participate in this innovation program right now. We did a lot of implementation in different countries, and we ready to do this for US market as well. We have really team with the proven results, that with experience in a financial sector. We got recognition from Visa, even a prize from Everywhere initiative of Visa. And our current round is 1.2 million. Out of this, we secured 280. All of these funds we're gonna spend to process of licensing in US, building a relationship with the banks, and as an exit strategy, it's gonna be acquisition from the global fintech, maybe PayPal or other bigger ones. That's it. Thank you very much, and stop to pay.
Awesome. So if I follow correctly, I'm tapping on the thing and skipping the cart. Is that the essence of it? So I don't have to go through add to cart and then, go back through and sort through. If you're like me, I tap a bunch of things and then you gotta kick stuff back out. It's all in your messenger, in your phone or on the social media platform.
He's frozen.
Aw.
Can he not hear?
He's frozen.
Oh, okay.
Yes. So we. Sorry, I missed the question. Like the question that.
So the item appears.
We can help facilitate the payment process in Messenger and social networks. So in these channels, usually even some countries not possible to do payments outside of US. Only in US exist just Stripe and PayPal in Facebook infrastructure payment methods. So, but we can enable any payment method for the merchant with much more cost-effective terms, and give opportunity to provide additional service to the buyer and merchant.
Awesome. And then you talked about the terms. Who pays for this? Is it still per transaction? Is it a percentage? Who's paying? Who's bearing the cost for this? Is it the merchant? Is it the platform? Like, talk to me a little bit.
this usual business model when merchant pay for the transaction commission fee. Nothing new in this, but we offer as well, as I said, license for the banks. In these terms, banks cover transaction fee for our service, and then they can build terms with their merchants by themselves.
Okay, thank you.
I got one technical question, and then just on the pitch side, I would say, I think these technologies are, super important and useful. So I think it's a good space. I think when I'm seeing a pitch like this, I'm always wondering to myself about, the company's both knowledge about the competitive landscape and the point of differentiation here is pretty obvious, but a lot of these businesses tend to look like features in other people's platforms rather than whole businesses. So I'd like to know a little bit more in a pitch like this, how you feel about the competition and, how you prevent yourself from becoming, or cannibalized by some of those folks who have, plenty of money to, build onto their existing payment, gateways and portals and enable this kind of stuff. And there's a lot of precedent for it, in the rest of the world too, more so than the States. So I would like to see a little bit more competitive landscape in a pitch like this so that it's clear to me where you guys sit and how you're different and how you might maintain some sort of competitive differentiation over time without getting kind of run over by some of the giant people in this space, because obviously payments is a massive space. So that for me was the part maybe on the pitch side that was missing a little bit. But otherwise, I get what's going on. It looks like a good business and a good model. I have a question about, on the implementation side, about the payments gateway itself. I know you can get down to the messenger level. There's obviously client software there and some things that can happen, so it's a much richer experience. But can this platform also sit on top of like, SMS or straight text, or does it require some sort of client software?
Please, can you rephrase what kind of additional software you mean?
Well, like I've been looking for and trying to find ways to enable payment straight from text without having to have a messenger client. So I was just wondering if that is possible, or if that's contemplated in an infrastructure like this. Like I'd be able to like text to pay, if you will, on a platform like this versus having to launch a messenger client.
So you mean like payment from the some invoice? Yeah. There
obviously have to be a communication with the customer, but I'm thinking just over text message. You know what I mean?
Yeah, absolutely. Absolutely. We enable payment even from the piece of paper when print the QR code. So
okay, that's kind of where I was going, where you can just show that interaction. Once that interaction is established, the payment can be established just through text response then.
Absolutely, yeah. We can enable it everywhere, like website, landing page, email. But we see that our powerful positions that new modern channels, like back in 19th it was email, and PayPal stick with the email. We would like to be like PayPal for messengers.
Yeah, gotcha. Okay, that's cool. And then you mentioned use of proceeds. I think this is B2B, right? You're going to license mostly banks and white label, and people are going to embed the tech. So that's obvious. So I'm a little bit less concerned about customer acquisition in a business like this, but I would maybe like to see some sort of slide around the long-term economics associated with, here's the revenue that's generated off of, a popular Instagram seller, when they license, here's the bank revenue that would be generated over a period of time, just so we could see stream of revenue against, kind of the investment thesis. That's all. Other than that, though, I like what you guys are doing. I'm excited. All right, that's it.
Thank you very much. Yeah, it's really great recommendation.
For a second, but let's go ahead and move on to Blessing with Cambio. Blessing, whenever you're ready to go ahead and share your screen.
Great. Good morning, everyone. Just want to confirm that you guys can see my screen.
We can, thank you.
Great. I will get started here then. Hi, I'm Blessing Abraham, founder and CEO of Cambio. Cambio is a platform that helps consumers rebuild and repair their finances. So I started Cambio because in 2014, I started another company called Savvy Intel. And to keep the business afloat, I made a very logical decision. I cashed out my 401k, I overdrew on my checking account, and I ran my credit cards to the limit. And it's really, really crazy to say that out loud right now, but ultimately I fell behind and ended up going into collections. So I went from being a prime borrower to being a subprime borrower in less than 6 months. Now, in 2016, our business started to turn around. We started getting cash flow. I started paying down my debt. And in 2017, we were actually acquired by one of the largest insurance companies in the credit union space called CUNA Mutual Group. But it still took me 4 long years to actually rebuild my finances, build up my credit score again. And this cost me thousands, all because credit scores are a lagging indicator of recovery. So unfortunately for most Americans, it takes them 7 long years to actually recover when they've had an item actually go into collections. And they don't walk the same journey that I've walked. And there are over 100 million Americans today who have an account in collections or have a credit score below 650. And the sad reality is these consumers spend about $2,400 a year extra on fees for banking services and loans. And the reality is this too, is we've made getting credit so much easier. So for example, you don't have enough cash right now for the new pair of shoes, buy now, pay later, right? But for consumers who get caught in the cycle of adding on debt and going into collections, it's a 7-year journey and they don't have a tool to actually help them rebuild. And that's where Cambio comes into play. We help these consumers rebuild the right way. We provide consumers with the 3 tools needed to rebuild. First, stabilize their spending. Second, clean up their credit and collections. Third, build credit to show payment history. This helps these consumers cut down on their rebuilding time, saves consumers thousands, and ultimately helps consumers build assets. So how do we go about doing this? We go ahead and, sorry, I got click happy there. We go ahead and help consumers. We help consumers by enabling them to actually join Cambio by either connecting their existing account or actually getting their own Cambio debit card. And then we focus in on what's important by giving them tasks to stabilize their spending. So we actually reward members for doing positive behaviors that helps them build habits and actually build up confidence. Next, we go ahead and focus on cleaning up their credit. So we actually give them a plan and a strategy to deal with accounts and collections. And we have an algorithm that helps them prioritize which debt to pay back based on the likelihood that a collector will actually agree on terms. Finally, we focus in on providing them a pathway to show recent payment history by providing them a loan that gets reported to the credit bureaus and also builds up their savings accounts. So we make money as members actually rebuild. Members can try the app for free by connecting their existing bank account, connecting existing bills so they can stay on track, and also receive free credit reports. Members wanting more can subscribe to a preferred service like bill pay assistance, which ensures that they don't actually miss a payment on a utility or cell phone bill. These services keep members engaged and results in us generating $120 per month or per member annually. Members who get to the point of rebuilding, so when we start to identify that they're actually at a point of rebuilding, we provide them opportunities to refinance existing loans with responsible banks and credit unions, helping them keep more of their money and helping build assets. Today, we've been able to acquire members through Google and Facebook ads and have kept CAC at $12. Since launching publicly in June of this year, we've added 2,800 new members. What's been exciting for us is in November, we're actually expecting to add an additional 1,500 new members just this month alone, and while keeping our CAC at $6. So we've actually reduced our spending on CAC. So we've cut it in half without adding an extra penny in general in regards to marketing in general. Over the next 12 months, we're going to grow our membership base to 50,000 total members. The other exciting part is our conversion from free to paying users. We've seen conversion grow from 25% to 33% in October, and November's staying at 33%. So even if we held steady at this 18% conversion rate that we've had overall, every member would pay back their CAC and cost of goods sold within the first 5 months. At the end of November, 5 months since launching publicly, we will start generating monthly recurring revenue of over $10,000. The marketplace to help these consumers is littered with one-off solutions, making rebuilding difficult. So existing players in the credit repair space cost consumers between $150 to $300 a month for their services. And while there's been new neobanks that have popped up to go ahead and help consumers gain access to banking services, many of these services are actually very much geared towards folks with thin credit files, not for folks looking to actually go ahead and rebuild their finances. So we combine these services to provide members one place to actually go ahead and rebuild. Our founding team has experience in these hardships, unfortunately. All of us have had parents, significant others, or in my case, have dealt with items in collections, so we know the struggle. This team has been the ones to go ahead and build out the prototype, MVP, and actually the first version of our app. And as you've heard from my story, I've had a successful exit of Savvy Intel, a SaaS-based data and analytics solution for banks in less than 3 years and have over 15 years of retail banking experience. We're seeking a $1.5 million round that will enable us to get to 50,000 members in the next 12 months. We'll do this by building out a banking channel partnership for new acquisitions and also launching a referral program. To drive revenue, we're building out with the lending network so we can actually give members an opportunity to refinance loans, and also introducing a loan consolidation offering as a way to help consumers negotiate with collectors. So if you're looking to be a part of a community that's helping bring normalcy back to consumers and helping traditional lenders actually partner with these individual consumers, come partner with us and come join our community in general. Thank you for your time.
Thanks. That was good. I like it. I mean, it's a good pitch. This is tough because there's so much activity in this space, and so from a business model standpoint, obviously you guys have a good idea, a good business. Probably the implementation is great. This to me is a sales and marketing challenge almost exclusively because there's just a ton of options out there for customers, and so as an investor, the first thing I would say is I'm shocked that you can get to a $6 CAC for a consumer conversion. That's absolutely unheard of, especially in the financial services space where customer acquisition is pretty expensive because switching costs are very high. Now, in this case, there's nothing really to switch because you're adding a service, but nonetheless, that's an insanely, kind of low number. So I would want to dive a little bit deeper on that to understand, kind of that, because if you can really get that kind of leverage, then the million or $1.5 million that you're raising then has, I would think, the potential to add way more in terms of capital efficiency on the investment side than would be typical. So that's kind of interesting. The other thing was you kind of slid in there, kind of the banking, the card kind of thing. That's a whole different business when you get into issuing cards to people and managing that. So I'm curious, just as a question, where that fits in versus, the education, the kind of planning, the management of the individual's credit score, and then their access to, capital through loans going forward. It wasn't clear to me exactly where your head, so I'd love a little bit more there.
Yeah, so the debit card offering that we started off with was actually version 1 of our product. So we have a bank of record that helps us issue a debit card. What we ultimately figured out was this, right? So folks were coming to us saying, hey, I love we call it the routines program. So the habit building program, the ability to go ahead and manage your debt. And then what we're offering from a lending perspective, they wanted all that. What they didn't want to do was switch their entire banking life over to Cambio for the sake of switching over. So they loved all the back end pieces. So we made a pivot to go ahead and say, hey, you know what? You can go ahead and connect to your existing account. We're slowly transitioning away from debit card users in general. So our first set of users are doing it. We're getting away from that just because it doesn't make sense. It's not what the consumers are actually doing.
That makes more sense to me. Okay. Yeah, thank you.
I actually like this space a lot. I have several questions, but I'll start with the basics. We talked about the credit bureaus because they're generating the score, and I think we've all done those credit simulations, what to do where, when, and I found that they're typically pretty wrong. As you help people rebuild and tweak, how are you kind of figuring out the secret sauce of these algorithms in order to actually have tangible rebuild credit at the end?
Yeah, so I 100% agree that it's usually wrong, those simulators, because they're like, hey, just go open up another secured credit card, right? And your credit score will go up by 20 points, which is not the case. So the demographic, again, just that we're dealing with is folks have items in collections. When they say they have 2 items, they probably have 4 items in collections, right? So that's why we really specifically go after folks that are have those items in collections, and we come up with a strategy in general that says, okay, the likelihood that this collection agency is to negotiate or settle this debt with you is XYZ. So this is the offer that you should actually go to them with, because once you settle that amount, your credit score actually starts to rebound versus opening up another secured credit card. It doesn't help this consumer base out. So we actually don't use the simulators at all in general. What we focus our attention on is to say, hey, number one, we need to go ahead and find ways for you to start getting $20, $30 back a month so that we can settle these items in collections. Once you do settle those items in collections, what we focus in on are those credit builder loans that help build up savings for you so that you can start to show a recent payment history. And then ultimately, like I said, our goal is how do you go ahead and build assets for people is if we're dealing with folks that are coming to us with 20% auto loans with their interest rates that they're paying for a $20,000 loan for the next 5 years, right? So we're saying, hey, we can go ahead and build a network of banks and credit unions that are willing to refi to these consumer bases and potentially save them hundreds of dollars and put them back in their pocket, if that makes sense.
Okay, and then the other question is about, I'm curious about your default rate, since we know that these folks still have some thinner margins. If you're going to be extending credit, one, what do you use as an indicator if it's not going to be credit score and you already kind of know where they are? 2 is, what's your default rate as it relates to those loans that you're making within your network? Or have you made any loans if you have?
Yeah, so we've only been betaing the credit builder program today. One of the nice things is it's a low risk, high win for both parties involved. So because it is a secured, basically savings account, you're not necessarily going out and paying against the installment loan. We're able to report back to the credit bureaus if for whatever reason you have to you can't fulfill the loan itself. There isn't collateral that we put up or there isn't money that we forwarded you to begin with. So we're able to really manage out our risk in general. Within the beta right now, default has been 5%. So we're feeling pretty good about where that's headed. The real truth will come into play once we extend out that lending network of bringing in auto loans, right? One of the reasons why we're pushing more on the auto loan side of issuing loans is, number one, it's collateralized. Number 2 is, when we've looked at folks' credit reports, where they're missing payments or they're defaulting is on unsecured and personal loans. What they're not missing payments on is their auto loans, or they're 30 days behind and they get caught up.
I would think that if you're talking about secured loans, that you guys are primed for like a DeFi application where you can collateralize with like a stable coin or something so that the loan is never even reported to credit bureaus and it's not affecting their score. Unless, I guess, maybe you want the loan and want the repayment because that's how they drive the score up. But it feels like there's some DeFi in the back here that would make sense somehow.
It does, and that's something that we're looking at, but we certainly do want to report these back to the credit bureaus, though, so that we could start to show, again, that growth.
Yeah, you want to see the improvement, I get it.
Well, my vote is no credit scores at all.
Yeah,
Actually, I think it's you call it a lagging indicator. I think it's a terrible indicator. So I like where you're going. I would, encourage pushing the envelope even more because everybody knows it's a bad proxy for everything. And it's not real time, but definitely there's a lot of room for improvement. So trying to tweak a bad system is not my favorite thing.
And one other quick question. Some of the companies like Trim and the others are actually intervening on the settlement. Are you guys intervening or just making the recommendation?
Right now,
do manage it themselves.
Yeah, right now we're just giving recommendations. We're going to intervene moving forward with that loan consolidation side.
Yeah, that's a people problem because obviously it doesn't scale as well. But I do find those services that do intervene on the customer's behalf tend to get really good results. So I'm glad to hear. I would put that in the pitch that you're headed in that direction because they get appreciably better results than the people having to kind of negotiate themselves. Because you have professional negotiators that are used to dealing with these firms, and that is a really big value add. So I would love to see that in the pitch.
Yep. Yeah. Homework versus actually doing it for them, better results.
Yeah.
Awesome. Thank you. All right. Thanks to all of the presentations. I know we only got 3 logos on here, but let's give a big round of applause to all 4 companies that presented today. So as I mentioned before, we have, this is Global Entrepreneurship Week. And just to give you a little bit of an idea of what's going on this week, in case you've missed it, you can learn more at inclt.org, just Innovate Charlotte, /GEW for Global Entrepreneurship Week, -2021. Some of the events that we had going on after this, so if you look here on the right of the slide, after this, there's a nutritional lunch and learn event over at Tavers Co-working. Venture for America has an early career startup advice virtual session. And then we've got a marketing and sales masterclass at Tavers Co-working in South End later today. And you can again learn more at that link. Tomorrow, we've got an innovation workshop for girls, middle school girls. That's tomorrow morning. Innovate Charlotte is going to put on the Intro to the Charlotte Startup Community event. So if you are new to the ecosystem or want to learn about other resources, events, programs, definitely join the Intro to the Startup Community event. We're going to have a resource fair there, so you get to learn a lot about the ecosystem. There's also a Flywheel Cafe up at the Cabrera Center in Concord. Charlotte Angel Fund is going to have a virtual meeting tomorrow. If you've ever been interested in seeing what happens at an Angel Fund meeting, that's a great event to check out. And then tomorrow evening, there is the Rocket Pitch Moonshot edition over at Tavers Co-working in South End. And then on Friday, we wrap things up with the Getting Started workshop. So if you've got an idea and you want to start a business, or you want a refresher on some of the basic building blocks for getting your business off the ground, definitely attend this 3-hour Getting Started workshop hosted by Innovate Charlotte. That is a virtual event. And then we're going to end the week with networking and a ping pong tournament over at Tavers Co-working in South End. So there's a lot of events, a lot going on. And again, you can learn more at inclt.org/GEW-2021. So with that, we're going to next go to our breakout rooms, and I'll get to that in just a second. If you are watching on the live stream and you want to join our virtual networking, just go to pitchbreakfast.com/Zoom. That'll bring you into the Zoom call, and you can participate in the networking portion. But before I do that, we want to give a big thank you to all of the companies who presented, and a big thanks to the panelists behind me who did a great job with their Q&A and questions. So thank you guys.